The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the December 7th, the wonderful Wednesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. And let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know I'm absolutely grateful for your presence here, but even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to pick up that phone. We would love to hear from you at 877-927-6648. Now, if you can't call in, but you still have a question, go ahead and send me an email. Send that to Steve at TFNN.com. And inside that subject heading, please put radio show question. Of course, if you're inside our Tiger's Den, well, any and every ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, a bit of a mixed bag out there. That mix coming from the NASDAQ, which is slightly lower. 9 points for the NASDAQ 100, 5 points for the composite. The Dow's up 120. That's about 0.4. 0.25% for the S&P, or 9 points. The Russell's up 0.5%, or 9 points. The semi's up 10 points, or 0.4. Trend is just slightly positive. Gold's up $14. Silver's up 55 cents. Light sweet crude back $1.20. Trade out at 73 and change. Natural gas is up 3 cents, and a 30-year Treasury printed out 131.07. That's up 26 ticks. If we take a look at what's leading the charge, dollar-wise, the upside, you got Prometheus Biosciences up 177%. They've cured something. Up $64. Mon is up $27. That's 19%. Solar Edge Technologies up $17, nearly 6%. Casey's General Store up 6%, $13.80 there. Alnylam Pharmaceuticals is up 11, nearly 5% to the upside. Leading the charge, the shakers to the downside, you've got Booking Holdings off $79, nearly 4%. M&T Bank, $12 and change, down nearly 8%. Murata Therapeutics off 17% plus, $13. Clearfield Inc. down about 6%. That's also about 6%. So we've got some movers and we've got some shakers. Let's first go take a look at what's going on inside the general markets by looking at the NQ. We're going to shift chart panels out here, or screen panels. We'll get over to the white background charts. We'll take a look at our multi-time frame charts for the NQ. Actually, before we do that, well, no, let's do this. First, as when it would start from bottom right, the 10-minute chart, 15, and go over to the left. So 10-minute chart, TD9 count bottom this morning at 740. Rhodes Momentum Indicator bottom completes on a 15-minute chart at 8 a.m. TD9 count completes at 8:30 on the 30-minute time frame chart. TD9 count and Rhodes Momentum Indicator signal, that completed at, give me a moment here, that confirmed at 9 o'clock this morning. Nothing on the 120-minute time frame chart. You do, or you may have, a buy the D point pattern on both the 5-hour and the 4-hour time frame charts. What we don't know, and the reason why I say we may, is because what it needs is a bullish reversal candle, and both these candle sessions will not close till 2 p.m. But right now, as of 11:10, you do have bottoming signals there. So of the 7 intraday time periods that we look at, 5-hour, 4-hour, 2-hour, 1-hour, 30, 15, and then 10-minute charts, we've got bottom patterns out there. We've got bottom signals. Now the question is, what is price doing? What's the price doing as it gets to resistance? But before we get there, let's go see if market breadth is supporting the rally or where we're at with regard to market breadth. Now, this is a 30-minute time frame here, and this is for the NQ. And for the NQ right now, for its 30-minute time frame, you can see you've got 63 instruments trading above the top of a 30-minute profile and 8 below the bottom. So that most certainly is supporting a further rally in the 30-minute time frame chart. Now let's go take a look at the 30-minute time frame chart, rip it apart. Well, it's suggesting from a profile standpoint that we should see another, or we should see that the rally could or should continue. However, what you and I can see is 11,567.75. That is the TD9 count breakdown area here. That acted as resistance on a move higher at the open this morning. That is acting as resistance as we speak right now. So there's positive market breadth. If, in fact, on a 30-minute basis, the NQ can close above 11,567.75, that's going to suggest higher price. Now, higher price to where? That I don't know right now, at least in looking at the 30-minute time frame chart. We'll look at the others. So we know, though, key resistance out here for the NQ, or at least one key resistance level, is going to be 11,567. Now, let's do the same thing. When I say the same thing, we've got 4 other time frames that we can take a look at. For the NQ, or the NASDAQ 100, whoops, that was bringing over the same chart. Nice job there, Steve-O. Very smooth. Was that not smooth or what? Yeah, don't worry about it. I probably have more smooth moves like that too. But let's go take a look at what's going on with the other 4 time frames. That would make sense. Now you're looking in the upper right. Well, if we look at a 60-minute time frame chart, that's miserably bearish. When I say miserably bearish, let's just open up the chart here. Let's get rid of what's in between. And we can see right now you've got 10 instruments trading above, 59 trading below. That most certainly is a bearish outcome. 4-hour time frame chart. Remember, that's one that's got that current bullish reversal candle. We don't know if it will have that at 2 p.m. Here you have 9 instruments above, 61 below. So this says that the rally, and why we're seeing some sell-offs here, even the daily has a bearish crossover, 19 above and 33 below. So the NQ's got some real problems other than for the 30-minute time frame. Of course, if you're going to change your trend, you do it for the 31st, then the 60, then the 240, and so on. So now on the 60-minute time frame chart, let's take a look at it. As we mentioned earlier, this formed both a TD9 count bottom and a Rhodes Momentum Indicator bottom. It did that at 9 o'clock this morning. What price did was ran into resistance. Resistance where? It's TD9 count breakdown area. That's 11,593. So another level to put on your pad of paper. And actually, I put 11,596 and a quarter because that is the top of the profile. So you got profile and TD9 count breakdown resistance for the 60-minute time frame. Those are the areas to be watching. If price is able to close above those levels, I would think that the logical thing would be that that the NQ's market breadth would be improving, but that's not the position that we have as we speak just yet. And price that could be the end of the counter trend rally. As we take a look at the instruments out here, the 60-minute ran in resistance, the 30 we've covered that, the 15 did as well at 11,593. And again, the 2-hour and the 4-hour chart, we really won't know if they will confirm a buy the D point bottom until 2 p.m. That's as our man David White is coming on the air. So that's what's going on when we take a look at the NQ. I'll go ahead and populate these charts here just for the moment for the ES Mini. Let's see if we can get these to I'm kind of screwing up here. Not intentionally. It's just the way that it is now. We're not going to have a chance. So we can take a look at the ES Mini a little bit later. When we come back from this break, we'll have things set up so that we can take a look at the euro and the U.S. dollar for Peter in Park City. Steve Rhodes with TFNN. We'll be right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Still a mixed bag. Dow's up 84, S&P 4, NASDAQ 100 is off 30 points, and NASDAQ Composite's down 23. We're taking a look at the charts here for the euro. This is for Peter in Park City. Peter, as I take a look at the euro, first thing, on a weekly basis, we can see that bar number 8 is likely to complete this week. That says the euro could form a top between this week and the next 2. Now, bar number 9 is going to need to complete. In order for bar number 9 to complete next week, you need to see a close above 1.0317. So that'll be for next week. I put that in your pad of paper. The reason that you'd be looking for that would be a TD9 count top to form. Now, it can be the high of this week that identifies that top, but you still need bar number 9 to complete. That's the first thing. Okay, let's move over to the daily time frame chart. The daily time frame chart, I'll just simply expand this out. It'll be easier for you to see here, is this has formed a wave 7 top. That's courtesy of Basil Chapman, who I believe is doing a workshop. Maybe it's next Thursday or so. This is just a very small portion of it. But when you get to that wave number 7, that can be the sign of a top. That's what we see so far. But right now in a daily time frame here, Peter, you can see that yesterday was a slight close below that green oscillator change line. We're back above it today. The signal right now is neutral, even with that top. Watch that green oscillator change line, 1.049. If price stays above that, the signal will remain neutral. That's that 7th wave top signal. 30-minute chart not providing us with a ton of information, nor is the 60, other than price did pull back and it found support at its oscillator and change line. I don't see a lot of assistance here on the other charting time frames out here. So how are we going to take a look at the euro? It's got a top. It's got a valid top at price above that momentum line, that green oscillator and change line. If it stays above that, the top becomes somewhat questionable. So hope that helps you out with regard to the euro. Let's go take a look at the U.S. dollar index now. Let's see which charts here pop up for me. These are the components that make up the U.S. dollar index. So it is these 6 currency pairs: the euro, the yen, the pound, the Canadian dollar, the Swedish krona, and the Swiss franc. That's what makes it up. The top 3 represent like 70-some-odd% or more of the U.S. dollar index. We've covered the euro. What do we have going on the Japanese yen? The move lower here in the Japanese yen says that the currency is getting stronger versus the U.S. dollar. Move higher, which is what it's doing right now, it gets weaker and the U.S. dollar would be stronger. Well, the Japanese yen formed a nice TD9 count bottom. Now, what it's doing here, It's dealing with that resistance level of that oscillator and change line. You can see that price has been below that, quite frankly, since sometime in October. So a close above that, this is a daily time frame, would signal a change in trend. That being 137, just call it 137. A close above 137, Peter, that's going to suggest that the yen should target 141.61. That would be moving higher. That would be weakening against the U.S. dollar index. If we take a look at the Great British Pound, this has formed a wave number 7 pattern. So it looks very similar to, I don't remember what we were looking at that had the TD9 count top, but this has, it was the euro. Hello, Stevie, wake up. So now you've got a wave number 7, but just like the euro, price is trading above its green oscillator and change line. The green oscillator and change line right now is printed out at 1.21. If price stays above it, this signal would be neutral. Canadian dollar out here. Now, it's more than what you were asking for. Actually, I don't want to give too much more. Let's come back to the U.S. dollar index. So on the U.S. dollar index, A to B equals CD to the downside. That was confirmed a couple of days ago with that bull sash candle. Now what price is dealing with here is the resistance of the bottom of its daily profile. And that level is 1.055152, we'll call it. If price can close above that, that would then suggest that the U.S. dollar index should make a move to the 106 to the 107 level, 106.83 to 107.36 area. If I take a quick peek here, just to finish this off, just because we're a little bit thorough around here, we take a look at the multi-time frames for the U.S. dollar index. What do we see out here? I see a number of Rhodes momentum indicator bottom signals for the 5-hour, the 4-hour, the 120-minute time frame chart. As I move to a 30-minute time frame chart, there's an A to B equals CD pattern that I see that has completed. Price dealing with the resistance. I'd watch 105.23 there. That's pretty much what I see here when I take a look at the euro and the U.S. dollar. So I hope that helps you out, Peter, and provides you with the information that you were looking for. And thanks so much for taking the time to write in. Now, this is going to take me just a moment here, folks. I need to close this out, which we'll see. We'll get to that little running woman out there. And now I need to kick in another data feed. Got that. And now we'll go to get our 3-panel set of charts out here, daily, weekly, and monthly, so that we can move on to Phil's question. And Phil wants to take a look at ticker symbol LMT. I believe that is Lockheed Martin out here, trading out at about 484. And I don't recall what the question was, so we're just going to look at this. So if we take a look at Lockheed Martin, what it did yesterday, generated a bearish engulfing candle. And so, Phil, what that did, you can see it had the Rhodes momentum indicator signals here that were triggered. There was a Rhodes momentum indicator signal, for example, triggered back on November 8th. You then get a bearish reversal candle, the bearish sash the next day. It ends up taking price back to support inside its bullish structured profile. Well, yesterday you had another signal, Rhodes momentum indicator signal. That was on December the 2nd. You get a bearish engulfing yesterday, so now you've got a top. What this would suggest that Lockheed Martin, more likely than not, will pull back to the 475 level. I would change my tune if price closed above 403.14. Can it close above 403.14? Well, before we go look at the weekly and the monthly chart, let's go see what's going on a 30-minute basis. We've got a nice TD9 count bottom that actually completed yesterday at 2:30 in the afternoon. So you've got that bottom. Price is above its TAS market profile. So LMT, Lockheed Martin, could be targeting the 401.32 level. It will need to stay above 485.03 in order to provide that signal to you, Phil. So I hope that helps you out. Back to the weekly chart here. What do we have? We have a Rhodes momentum indicator signal that needs a bearish reversal candle to confirm. You've got resistance at 494.66. That is the top of the weekly profile. And on a monthly basis, everything looks hunky-dory. We don't see a top, at least not just yet, because we really need the monthly chart to complete. So, Phil, I hope that helps you out with regard to Lockheed Martin. Thanks so much for taking the time to write in. Tim M. wants to take a look at payroll company ADP. So let's get those charts fired up here. Let's actually read Tim's question, which goes like this. I have a long position in automatic data processing, ADP. Could you please take a look at daily and weekly support and resistance levels? Absolutely. So your daily support area right now, I give you so the real support on here is at 257.35. 257.35 is the center of its bearish structured daily profile. Price was above it for more than 2 consecutive sessions. Counter trend moves to the downside will typically find support either at the top, which is at 259.35, but more likely that center area. Now, The low from yesterday's low was 257.05, closed back above 257.35. The low today is at 257.33. It's back above the top of that profile out there. So although you do see, how about that? Beautiful grammar out here, courtesy of Stevie's son. What I don't see really is a topping signal just yet. We've got our topping pattern. We've got a Rhodes momentum indicator signal, but no bearish reversal candle out there. Now, if price did close, Tim, below 257.35, and I know you're looking for long position, or you're in a long position, the next area of support would be 252.79. From a weekly standpoint, no top just yet. Support 253.32 or thereabouts. That's the weekly oscillator change line, and profiles are way down below. Now, the monthly says, prepare, you could get a TD9 count top that forms between this month and January next year. Steve Rhodes with TFNN. We'll be right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Now we've got almost a sea of red out there. The Dow's off at 63, S&P 14, NASDAQ 193. The Russell is just slightly positive out there. We're taking a look at the charts here for Verizon. This is for Johnny, who has a long position in Verizon. So as we take a look at this out here, this does have a Rhodes momentum indicator bottom. That went ahead and completed on October 13th. Now what we have is in Verizon, we have price below. It's now I don't really have a top out here, so to speak. It doesn't look like to me that this completed an A to B equals CD pattern, but let's go ahead and measure it. I could be wrong. So that would be the A to B point, and then the C point, C to D, would look something like this. Yeah, no, it didn't complete that pattern. So that was not the topping pattern. Doesn't matter. What we can say about Verizon, VZ, the ticker symbol right now, is that price is trading below the bottom of its daily profile. Without a bottoming pattern at this stage here, price may be targeting that October swing point. That October swing point is October 21st, and that goes from a low out there of 34.55 to a high of 35.70. As we look at the weekly time frame, what do we have out here? This formed a wave 7 bottom, took price higher. No reason why it stopped where it did, but it did. And now what price is doing, it's testing its red oscillator and change line. 36.60 is the print. The actual low this week is 36.63. If price were to close below that red oscillator and change line, Johnny, I apologize, that would then suggest a move back to the 35.38 area. And on a monthly time frame, we do not have a bottoming well, we have a buy the D point pattern. So that buy the D point pattern looks like this. I'll just simply draw in the A to B line. Well, I'm going to try to do that. Here's the A to the B, and then I'm just going to move that over to the C point out there, and you can see this was, maybe a 1 to 1.618 or 1 to 1.272. Doesn't matter which of those two extensions it was. It was last month that generated that bull sash candle. Now, the price closes below that low, well, really be the low of the previous candle. My apology. They have to close below 34.55. So to negate the buy the D point pattern out there. But you've got no profile support, or I take that back. There is new profile that is attempting to form this month. And it's at the 36.65 level. So 36.65. Let me just make sure that I'm reading the right thing. What did I do there? Sorry, on a different screen. Give me a moment here, folks. I need to try to fix this. Unlock it. There we go. Okay. So, yeah, the 36.65 is the key area of support that you should be watching. That is the bottom of the monthly profile. So when it comes to Verizon, let Stevie summarize. I've got no bottom signal in Verizon on a daily basis. It is looking to me like it wants to trade lower. The confirmation of really trading lower would be a close below that weekly oscillator and change line that's currently printed at 36.58, and that would suggest move back to the 35.38 level. If we take just a quick peek here at the 30-minute time frame chart for Verizon, what we will see is what? We will see a Rhodes momentum indicator bottom that gets confirmed at 3 p.m. yesterday. We've had a nice little bit of a nice rally out here. Don't know why it stopped where it did. Again, I don't have any level of resistance that pops out to me on any of the time frames, being daily, weekly, monthly, and 30 minutes. So it's not looking great. That is Verizon out there. So my suggestion, this is to use some kind of stop. That stop, by the way, the average daily price movement is about 79 cents over the last 10 trading sessions. So, you'd use a stop somewhere below 79 cents. So I hope that helps you out. And thanks so much, Johnny, for the request out there. Rich for life. Oh, I love that. Peter wants to take a look at the advanced client oscillator. Okay, so we've got TWNK, Hostess Brands, Twinkies. I haven't had a Twinkie in a long time. But let's go take a look at what TWNK is doing. How about something sweet? There you go. So that's from Rich for Life out here. So let's get the stock charts populated. When we take a look at the daily time frame out here, Rich, what do we see? What do we see? What do we see? We've got a to B equals C dependent. Let's see if the daily time frame B point was taken out with volume. That B point that I would use would be the trading day of November 23rd. Volume, there was a little over 1 million shares. When that was taken out a couple days ago, that was 1.3 million shares. So what I see in Twinkies here, nothing that's too sweet, is an A to B equals CD to the downside. That has been confirmed. I'm just simply going to move this over. That is the A to B line to where the C to D would go to. And that says, that this set it down to the $23 area out there. Now, as we look at the weekly time frame chart for Twinkie, this has a confirmed Rhodes momentum indicator top. Price is inside the consolidation of its current profile. The bottom of that profile is 23.63. The center is 24.22. So what I would say right now, Rich for Life, is that it looks like Twinkie wants, or a Hostess Brands, wants to make a move down to the 23.63 to 24.22 area. There is some support at 24.24. That is the monthly oscillator unchanged line. If you do get a bearish reversal candle this month, you'd confirm a sell the D point pattern. But right now, just to kind of, let's take a look at a 30-minute chart, and then we'll summarize what Hostess Brands, TWNK, is communicating to us. And if we look at a 30-minute time frame chart, you have a TD9 count bottom, and that led to a test of TD9 count breakdown resistance up at 25.19. So Twinkies Hostess is not giving us any signs of a breakout. In fact, it's giving us more signs of a breakdown, not the nervous kind, but the price kind. And that price kind should take us into that 23.63 to 24.22 level. So, Rich, I hope that helps you out. Thanks so much for taking the time to write in. We'll check the emails out there. There's no request on emails. The advanced decline oscillator line. So let's go. Johnny says, thank you, Steve. I currently don't have a position in Verizon. Looking for an entry point. Appreciate the analysis. Okay, perfect. So you were looking for long. So I think you're going to be patient on that one. And sorry, I write all these things down and I forget exactly what it is that folks were looking for out there. So let's go to, Peter had asked about the advanced decline oscillator line, which is below zero. So let's go take a look at it. We'll change over to the black background screens. That's how I'm able to obtain that data. We'll get over to that actual tab out here. And here we go. Now, the advanced decline oscillator, folks, that is the center panel here. That is the difference of between the 19 and 39 period exponential moving average of the advanced decline line. Boom. I know that is a mouthful, but that is what it is. Now, when that is above zero, it's presumed that buyers are in control. Now, this is very generally speaking. There's other nuances to it. When it's below zero, sellers are the one that are in control. Closed below zero yesterday, a second consecutive close today. Peter would suggest that sellers are, in fact, in control out here. The current print is minus 49.89 out there. So that's the advanced decline oscillator. What do we want to go take a look at next? Well, as long as we're on this chart out here, and we don't have any requests, and I don't think I've overlooked anything, and if I have, somebody's going to tell me, please. But let's just start with a blank Dow chart out here. Now, this takes us back into the 2009 bottom out here. And let's decorate it a bit. Let's take a look at, we're going to try to figure out what the Dow is doing and where it's headed to. Now, one of the things that we would look at, there's a couple different things. Let's first take a look at the rising price channel. So if you take a look at, now this is, when I'm looking at I'm just using the actual high or low to come up with this. So we're going to call this the trend channel. And here, if we connect the low from back in 2009 to the 2020 lows out there, and then we can see that the top out here, which was back in the 2014, that really set up that channel. Then these next dashed lines out there, they're the exact same distance. That's how you do it when we take a look at diagonal price channels out there. We'll take a look at horizontal ones as soon as we get back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. The Dow's down 26, S&P's off 8, NASDAQ 100 is down 70, the Russell is up 1 point. We're taking a look at the Dow charts. I first threw in my diagonal trend channel lines out here. Again, the solid lines are the first channel that is drawn. And then once you have that first channel, all you have to do, well, at least I've got a tool here that will replicate that by increasing it by 100%, either to the upside or to the downside. Those set up the next set of channel lines. Interesting how, in fact, that first dash line, price really did find resistance as well as support at times there, and that price makes its move up to the next level where it found resistance. Right now, price is trading in between. So what is that telling us, Steve? Well, we really have to further decorate the chart out here. What we do know is price is above a trend line level of support, a longer term. This is a weekly chart, by the way, that we're taking a look at. So now let's go add the horizontal version. Here are the horizontal trading range boundary lines. Now, I can't tell for sure, but it looks like to me that the primary trading range boundary lines were created between the 10,558 level and 13,179. These are the digits off to the right-hand side of the number tell you how many times there are closes or opens at or near that price level to give it a little bit of wiggle room out there. And so in that case, I'm just identifying the largest number of co-located opens and closes, figuring out that distance, and then just simply replicating that and adding that to the top or the bottom. So what we can see here is that we were in the center or close to the center of that rising price channel number 3 out there, but where price also found resistance was at a horizontal trading range boundary line, and that is currently at 34,152. So if price is unable to bust that up, and if we take a look at a pullback, the first target for a pullback inside of the Dow would be the yellow dash lines out there in about the 32,065-ish area. Don't hold me to the T out there, but that would be a logical place. That is the horizontal trading range boundary lines. We can take those off the system, which we will, because we can do more. Here we can see that. So this is the interesting thing. If we take a look at the Dow, what the Dow has done, the Dow has busted through a descending price channel out there. Now, we can put that descending price channel, let's put it with a rising trend line out there. Nope, we don't need that at this stage here. So where's price likely headed to? Remember I first said this dashed line out here? Well, because price broke out of that descending price channel, a more logical target now for the Dow on a pullback, and you can draw this on your chart. You can do this on the diamonds. You can do it on everything because it has the same type of patterns out there, is that the first level of support would be coming back to where it broke it out from. And where it broke out from was a descending price channel. And if that were to take place this week, that's at about the 32,971 area out there. So that becomes a logical price target. Here, so we had all kinds of price channels that are in here. If that level fails, Then what we'd be looking at that yellow dash line, somewhere around 31.9 or something like that. We'll have to look at it as time gets through that. And if price were to break through that, then the next level of support should be that rising price channel out here. And I can't give you the exact figure, but it's in the 29,006-ish range out there. Is there anything left that we can put out here, Stevie? I think I've kind of covered it. Yeah, pretty much have covered it. Now, that trend line out there that I just drew in, that's coming off of the highs out here in 2018, then the highs in 2020. And that green line can act as a level of support. You can see right now with regard to the Dow, that is where price is trading at. So that trend line is helpful to us because if we get a close below it, and it would be about, well, just use the, let's just say that's about 33,500. So close above below 33,500 brings those other trend lines into effect out there. So that's the Dow, and in the fully decorated chart, kind of looks like. Did I put this one in there too? Yeah, we won't have to put that one in there. Kind of looks like this in case you're trying to take pictures inside the Tiger's Den or on Tiger TV. Now that looks like that's a confusing chart. We put all those lines up there. That's why I simply did it one at a time. Okay, we had a request to go back and take a look at the ES Mini, very similar to what we did on the, thanks, Flip. Very similar to what we did in the NQ, but now for the ES Mini. So let's go ahead and flip over to the white background charts. And what we'll do here, in addition to taking a look at each of the charts and what they're communicating to us, let's start by taking a look at market breadth. Let's do the same thing. What did I do? Delete it? Well, I'll be a son of a gun. I did. So let me get this going again. This being the 30-minute time frame. We'll just take a moment here. The 30-minute time frame for the S&P 500. We're trying to understand positive or negative market breadth out there because we want to understand just simply what we're looking at. So on a 30-minute basis, you have, very negative market breadth. You've got 29 instruments trading above the top of a 30-minute profile fill, 294 below the bottoms. Now let's look at a 30-minute time frame chart for the ES Mini and see what it is doing. So here in the ES Mini, this morning forms a TD9 count and Rhodes Momentum Indicator bottom. The TD9 count and bottom, Rhodes Momentum Indicator bottom, get confirmed at 8:30 this morning. Then what do we see? We see a nice rally. That rally takes us up to TD9 count breakdown resistance. That number's at 39.50. Price actually closed above it for 2 consecutive sessions, and it looks like it's getting ready to take off to the upside. And it was until that next profile formed. That profile formed at 11:30, and that set up resistance at the top of that profile. That's at 39.6150. 39.6150 was the high of that session. Now, support out here, Phil, is down at 39.23. That would be level 2 support. Level 1 support, that would be level 3 support. Level 1 would have been the top of the profile. Well, it cut through that. The second area would have been the center of the profile. The center of the profile is where? At 39.37. And then the bottom is at 39.2350. So right now you've got a bit of a consolidation. Nothing is broken down just yet. This is really telling us about a consolidation. This suggests to me, Phil, just looking at the 30-minute time frame chart, about a choppy market. Why a choppy market? If you take a look at this prior profile, when I say the prior profile, let me go ahead and draw just a little rectangle around it, just so we're very clear here with what I'm trying to articulate. So here is the prior profile right there. Now, if we take a look at the new profile, we're going to go ahead and delete that. The top well above the prior top and the low below the prior low. So what this is, Phil, this is a signal of a consolidation. This is a signal of a choppy market out there. We've already seen all the bottom patterns out there when we took a look at the NQ. Turns out the ES has similar bottoming patterns that formed earlier this morning. None of those have been taken out. If they get taken out, Phil, that tells you about a market that's going to go ahead and move lower out here. But if you look at a 10-minute, a 15-minute, the 30-minute, the 60-minute, quite frankly, the 120-minute, even the 240, which this bar does not complete until 2 p.m., they've all got bottom signals. So there's a trying to establish at least a rally or a counter trend rally out there. But price is finding resistance at that 39.53 level. That's the 60-minute TD9 count resistance level, 39.50 on the daily, 39.53 on the 15-minute chart out there. So what does all this mean? Well, let's take a look at the market breadth here. We only looked at the market breadth for the 30-minute time frame. Let's take a look at the market breadth here for the other 4 time frames, for the S&P 500. Well, we'll see. It's negative for the 60, negative for the 240, and negative for the daily. On the daily, 112 incidents traded above the top, 151 below the bottom. So at a minimum, either expect a very choppy market or a market that wants to move lower. And that's based upon market breadth. Now, moving lower says you take out this morning's low, you should see a movement that cascades even further lower. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. Let's go to our last question, I believe, at this stage here, coming in from David in Tomball, Texas. You want to take a look at the B2 Gold. Ticker symbol out here is BTG out there. The question goes like this. What are the chances this stock will fill the upside gap created on November 4th? 294 to 303 before heading higher. Fill the gap on November 4th. So let's first find November 4th out here. Okay, this gap right there. We're going to switch over and take a look at a difference at the black background chart. So give me a moment here. We're going to change windows here, David, and I'll answer the question this way. When I take a look at BTG and I take a look at the weekly time frame, what stands out to me clearly is a sideways consolidation. Now, it's a fairly large consolidation from about the 286 level up to about 361 or thereabouts. Price right now is trading below the center of its bearish structured weekly profile. If price closes below 340, what it does here is it increases the odds, David, of a further move lower. That further move lower, well, it could be the bottom of consolidation, or it could just be the bottom of the profile at $3.12. Well, it turns out that the top of that gap to the upside from November 4th is at 303. So watch for this week's close. And the other thing I would be looking at is this little swing point, this little hammer candle from the trading day of November 21st. Now, there were 7.7 million shares. Yesterday, this came down with 10.5 million shares. So if price closes below that hammer candle, $3.27, what it will do is increase the odds of a further move lower. But on the daily time frame, what you have out here, David, is that gigantic profile. It goes from 301 to 360, almost similar to that weekly consolidation pattern we looked at. And so there's support at $3.16. So it's got some work to do to the downside to get back and fill that gap completely. But right now you're in a consolidation. Watch that hammer candle, though. That may reveal to you the answer to your question. Folks, stay tuned. We've got great programming lined up. Don't forget our Tiger Dollar sale. Go on over. It runs through, I believe, next Monday, if I'm not mistaken. Next Monday or Tuesday out there. I think it's Monday. So go ahead and get those Tiger Dollars. Save up to 40%. And I'll see you tomorrow on Terrific Tuesday. Please have a wonderful Wednesday, folks.